Let's get started. Um, Tesla stock is it was down 2%, then up 2%, and now it's flat. Give me 1 second. I'm trying to get Lucha on the board. He's having a connection issue here. Let's see. Nvidia stock. I published an article on Nvidia just now, about 10 minutes ago. The article is at the top of our screens. I went through the reasons why I believe Nvidia is worth only $100 per share, not the $134 that is trading right now. So that's a 1/3 drop that I think is going to materialize soonish. And then as Nvidia announces earnings on Wednesday, I'm going to publish another follow-up article and update my assumptions that I shared in that article. So I highly recommend reading the Nvidia article that is at the top of your screens. In the meantime, let's go through the market data. Dow Jones up 44 basis points, Nasdaq down 0.3%, S&P 500 is flat, Russell 2000 is flat. Very quiet day in the markets today, except for Chinese stocks. Chinese stocks are down across the board. Lucia, I sent you an invite to speak. That usually works better than a request to speak. So see if that can work for you today. Um, Let me know how the audio quality is. The YouTube seems fine. So if you can't hear me on X, go to the YouTube channel. All right. Let's read this first article. Wall Street mixed in uneven trade with Nvidia results in focus. I mean, almost nothing else matters this week. Wall Street's main indices were mixed in choppy trading on Monday as investors await the results from chip giant Nvidia for clues on the future of demand for artificial intelligence technology. Most mega cap stocks fell, with Tesla, Meta, and Microsoft down between 1 to 2%. Microsoft has scrapped leases for sizable data center capacity in the US, suggesting a potential oversupply in the AI infrastructure. So I also discussed this news in the article that's linked at the top of our screens, and a bunch of other data that came out over the weekend from the Microsoft CEO. I shared my notes on an interview that he recently gave, and highly recommend looking into it. Also, appreciate if you can please like and repost that tweet at the top. All right. The news came weeks after the launch of low-cost AI models from China's DeepSeek in January rattled tech stocks and stoked doubts about whether U.S. companies were spending too much on the technology and overestimating demand going ahead. Quote, it seems like this is a sector that I think has gone too far, too fast, and yet everything you hear is a lot of these companies are still coming out saying they're still spending, said Joe Saluzzi, co-founder of equity trading at Themis Trading. NVIDIA's quarterly results expected on Wednesday puts the chip sector in the spotlight for the week. NVIDIA is a stock that has moved so much so quickly, so it better have really good earnings and people will be looking at guidance and spending going forward, Saluzzi said. Shares of NVIDIA were flat on Monday, while most other chip stocks declined. The broader Philadelphia Semiconductor Index was down 0.6%. The Dow Jones Industrial Average, we went over that data. Apple reversed pre-market declines to gain 0.9%. The iPhone maker unveiled plans to spend $500 billion in U.S. investments in the next 4 years, including setting up a giant factory in Texas for AI servers. 7 of the 11 S&P 500 sectors edged up. Healthcare led declines with a 1% rise. Last week, U.S. stocks indices registered losses after a batch of weak economic data and disappointing forecasts from Walmart sparked concerns that the world's largest economy was stalling. On the data front, PCE, the Federal Reserve's preferred inflation gauge, is expected on Friday. But we already know what's going to come out from PCE. Interest rate futures indicate that Fed will leave borrowing costs unchanged for the first half of the year, according to data compiled by LSEG. Among others, Berkshire's Class B shares rose 4% to touch a record high after the Warren Buffett-owned conglomerate reported record annual profit. I'm going to read that letter later in the space. I haven't read it yet, so maybe we can do it together. Nike added 5% after Jefferies raised its rating to buy from hold. Domino's fell 3% after missing expectations for the fourth quarter same-store sales. That's because I switched to Costco pizza. Costco pizza is amazing. $10 for 18-inch, lots of cheese. And you get a cup for Pepsi because they don't have Coca-Cola for like 90 cents or something. And you're set for 2 days, 4,000 calories. Amazing. Costco is really good. It's so good that I might actually buy some Costco shares. Anyway. All right. Let's see. Any questions, comments? Please request to speak. We're gonna read a couple of articles. There's some rumors that FSD is coming to China. I mean, I guess that's a good thing for Tesla, but if nobody's using it in US, um, I estimate the number of daily active users for FSD to be about 100,000, weekly active users to be about 200,000, and monthly active users to be about a few 100,000, so maybe 300 to 400,000 users. So out of the, I think 4 million US owners, Tesla owners, that's, you're looking at a very small percentage using it, and really nobody else. So 100,000 out of 4 million owners would be about 2-3% usage rate. And I think most of them are kind of just huge Elon fans, and they want to be part of the beta thing, but it's not anything useful right now. So expanding into China, where it's obviously going to be less of a quality for a few years because they just haven't been training on, there's going to be a lot of edge cases that exist in China that don't exist in the US. And in the meantime, Chinese automakers are adding LiDAR-based ADAS that is more capable on their cars for free. So I don't know how Tesla FSD has any prospect in China whatsoever. Okay, so that's that. Ekti Penger, go ahead.
Hi, man. So I think one of the reasons that these guys are not using the FSD is sometimes AI hallucinates and makes epic mistakes. So I don't know if you've seen those videos, like people driving through red lights, stop signs, and so on. This is a huge problem with AI, and I don't know how anybody's gonna fix it. Nvidia, I mean, that should go into their sales. I don't know what you think about hallucinations and AI
Yeah.
making epic mistakes, because I don't know if you've seen it in many different
Yeah, I've seen it.
sectors.
I never experienced FSD driving through a red light before. I never seen that myself personally, but
But
I've seen many videos of it. And some Tesla bulls will justify it, saying that, well, it only goes through if there's no car coming. Well, I mean, it's still illegal, and it's not going to fly unless they change the rules or something. But I don't see that happening anytime soon. And so, yeah, it's a big problem. I mean, you can see it in the FSD tracker as well. Going through traffic lights is a big problem for FSD, and it's always been.
yeah,
Or
the
stop
FS,
signs, same thing. Stop signs or traffic lights.
yeah, I think they have to hard code those things. So you have to have a separate layer just for reading red lights, but I mean that adds just another level of complexity. And I mean FSD is probably how long off do you think it is?
So that question has to be very nuanced. So it has to be very specific question. So it depends on what you mean by FSD. So what exactly do you mean? Driverless autonomous cars that are
Yeah,
only
level
based on,
5
so level
robot taxis.
5,
Sorry.
so level 5 that are just based on vision, right? No LiDAR, no nothing, just
Yeah,
cameras.
yeah. I mean that's what they're betting on. So
Yeah, I think as far as investors concerned, I think what really matters is when it's going to be nationwide, and not just a service starting, but when it's going to be adopted by millions of people. I think that milestone is more than 10 years away. I mean, like, if you want to assume like a one or two algorithmic breakthroughs like transformers, then you can maybe get to 5 to 10 years range. But I think it's definitely beyond 2030.
Yeah. Also, one thing I've been looking into, like with AI, it improves drastically, and then it peaks, and it levels off, and then you need more money to just to get slight improvements.
Yeah. Yeah, I think like the only thing that's improved on like the one main thing that improved in I think AI training, AI performance was due to kind of test time compute, where they allow these LLMs to think for a few seconds, few minutes, maybe tens of minutes, depending on the question, and they come up with a better answer. Okay, but first of all, it's marginally better. Like it's not perfect. I've still seen issues. And then second, more important for Tesla investors, the car can't think for minutes. It can't. It has to be making decisions at an extremely rapid rate. So what they do sometimes is they have this like pro models and a mini version of it. Um, so the mini version is supposed to be like quicker and stuff, but it's not as effective as the ones that think longer. So then for FSD you have to have both. You can't have one or the other. So I think what Tesla's going to do is kind of go the same way that Waymo did, and then try to roll out section by section. So in Austin, Texas, and San Francisco, and maybe LA, maybe Phoenix, in ideal conditions, sometimes FSD does better than elsewhere. Like Northeast is horrible, horrible. Like it's unusable. I don't know of one Tesla person that uses FSD in the
Are,
Northeast.
are there any theories why it's so bad? Just lack of data, maybe?
I mean, lack of data, but also the roads aren't as clean. There's a lot of potholes, way more than in Texas. People are like, there's less like the streets are narrower in Northeast versus let's say Texas. Um, so there's a bunch of reasons. Like the weather isn't as conducive. There's a lot more precipitation in the Northeast than in California or Texas. So those are it's varied. It's a varied amount of issues. You know.
Hmm.
Yeah. So obviously, you're not going to change the weather. Obviously, you're not going to be able to fix the potholes. Um, and on top of
Yeah,
that, you have fewer Teslas in the Northeast as opposed to in San Francisco, Austin. And so your edge case collection isn't as robust either.
yeah. They
Um,
also have the issue with the sun glare and cameras. I mean,
well, that issue is everywhere.
yeah, I
So
know.
let's say they start some sort of a focused geofence area in Austin later this year or next year. And they can do that. But when Waymo started first, and I got into cruise as well in Austin, these cars were going like 20, 25 miles an hour. Who the fuck is going to use that? Like somebody's going to use it once or twice for kind of post on Instagram and show it off to your friends or whatever. But nobody's going to use it for A to B travel. And it's taken Waymo, um, 6 years to get to like a handful of cities. Even if you say Tesla does it in half the time, right? Because Waymo paved the way and you're just kind of first follower. Let's say Tesla does it in half the time. You're looking at a handful of cities in 3 years.
Mm.
And Waymo isn't profitable. Their revenues aren't very high. The adoption is not very high. Like they're giving millions of rides, but when you do the math of like a reasonable revenue assumption, let's assume Tesla's margins are a little higher because they don't have LiDAR and this and that. But still, it's like a few $1 million, a few $10 million to the bottom line. So that's not going to mean much for a company that is currently priced at more than $1 trillion for the next 3 to 5 years. Really, what
Yeah,
matters is when is it going to be nationwide adoption? So,
yeah. I actually met one of the lead AI guys in Uber a long time ago, and that's what I asked him. Like, have you guys thought about how much money it costs and these how expensive these cars are just to replace a taxi driver or a Uber driver? I mean, what is the cost benefit analysis? I don't get it. Like, if you use it for trucks, truckers get paid way more. And that would make more sense to me, even though that's difficult. But I mean, what is the salary like in a taxi driver? It's It's not like 200K or something.
Yeah. For those of you who just joined, I published an article on NVIDIA. Um, I think like I present a couple of ideas that I haven't seen presented anywhere else. So it's a unique article. I highly recommend reading it. Um, I shared some graphics, some data, some recent news that came around NVIDIA. NVIDIA is going to announce on Wednesday. I have a short position on the stock, and I laid out my thesis. I mean, unfortunately, this is a 1,500 word article, so that's already very long. It's the longest article I've ever written. But I can tell you live right now that I'm looking at my notes of the things I want to discuss at the page right now. Okay, I have the number of things I want to discuss here is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. I know the 23 items as I was brainstorming for the article, and I got to discuss how many? One, um, out of 23, I discussed one, two, very briefly, and then um, nope, 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 three, um, four, five. So just 5 out of 23 points. So I'm going to do another article later on in NVIDIA on top of this one after earnings. I'm going to discuss maybe five of the other ones, but it's just the bear thesis on NVIDIA is very strong, and um, and it's just there's not enough time to discuss all of those, but we have in Tesla Live over the years, so over the last year, let's say. So now I think it's time for NVIDIA to. Um, I mean, this Microsoft CEO's comments are pretty amazing over the weekend. If you guys haven't listened to that podcast, I highly recommend doing it. And the Microsoft Investor Relations team Australia today is trying to walk that back a little bit, but especially if you haven't seen TD Cohen's analyst note about cancellations of leases. I mean, I did the back of the envelope map in that article, and it really comes out to hundreds of thousands of GPUs. So we're talking like $10 to $20 billion of incremental revenue for NVIDIA at risk here. If the news that Microsoft is canceling leases is valid, um, that's a massive hit to NVIDIA's growth prospects. So considering that, I laid out my growth assumptions, margin assumptions, and did a quick back of the envelope DCF in the article. So highly recommend reading it. And if you could please like and repost that article at the top of our screens, I would appreciate it. Lucia, welcome.
Hello, Yaman. How are you?
I'm good. How are you?
All good, Yaman. So, I wanted to say that this week is such a critical week for the industry and the stock market in general. As you say, the Nvidia earnings are gonna decide basically the mood of the stock market, maybe for months to come. And I believe in what you say. I think your assumptions are correct. I think the market is going to have a rude awakening with Nvidia earnings, and we are going to see maybe the start of a big sell-off.
Yeah, maybe. Oh man, my friend just had a kid. That's crazy. Hold on, I just got a text. They've been waiting for a while. Oh my gosh, look at this baby. That is really cute. That's so awesome. That's so awesome. 9:18 a.m. Look at that. Ah. All right. Sorry, Lucia. So you think this is a critical week and Nvidia's results can impact market sentiment for months to come, and you believe this is the start of a drop in the markets. Well, let me
Yes.
ask you, how can you be wrong, do you think? What if the markets, like, for example, on Friday, we had Stephen Yutzi come up and say The next 10% move in markets is going to be up, not down. Maybe we should give you a coffee bet with Yutzi.
Sure, if he wants to.
Yeah.
So I have a question.
Yeah. Hold on one, Ekti. So, Luce, how far do you think markets will drop if they start going down now?
I think 40% is definitely possible.
Okay. Okay. Ekti, go ahead.
Yeah, so with every new technology, you get a huge bubble at the end of it. We saw that in the tech bubble in the 90s. So I don't know if you remember back then, a lot of companies which like burn a lot of cash and they went public and still went sky high just because they had like a name that in in the IT sector. So do you think this bubble can become that big that you just get new companies joining the stock market just with AI in it? Because it's usually what happens with these new kind of technologies. It always becomes insanely overvalued.
Yeah, I mean, I think there's going to be more IPOs at some point. Like, for example, I think OpenAI will probably go IPO at some point soon. XAI will probably go IPO. Yeah, I don't know. I think it depends. I think when you look at some of the metrics, like by some measures, today's market is more overvalued, in my opinion, than even 1999.
I agree, but I
So,
still think like
yeah.
an AI is so mysterious, nobody gets it, even though it's not. But most people don't know that. So I mean, it can go higher, way higher, just because markets can get insane at the end.
Yeah, I don't know. I don't know.
Because nobody's making like there isn't many companies into AI. I mean, it's the fangs. Who else hasn't been much IPOs?
I mean, the thing is like, anything can happen in the shorter term, I guess. But if your investment thesis is that the bubble will continue to be more of a bubble, then let's shake the ground. Luce?
So one of the things that really, I think, opened my eyes to this bear thesis is when Yaman mentioned all the zombie companies that are basically alive only thanks to meaningless and baseless hype around AI. And I think it's time that the market must become more efficient. I don't think it's possible to continue like this.
Okay. Tesla will triple.
Hey, man, are you ready to talk about the comparison between BYD self-driving versus Tesla?
Yeah. Yeah. What's your question?
I just was wondering how closely have you compared the two technologies from the announcement that BYD made versus Tesla?
How close what?
How closely have you compared the two technologies, Tesla
Well,
versus
it's not.
BYD?
So I didn't look at BYD technology in depth. I've test driven Tesla software, each major public version for the last 3 years or so. Um, but I have watched, like, I highly recommend people watch Kyle's video showing another brand's performance in China. So this is a consumer vehicle that has LiDAR, and Kyle is in the car passenger seat with the owner of the car in the driver's seat, and the car is just driving around in China with a really heavy traffic situation and handling everything perfectly, like way better than Tesla FSD does today. And no nag, no, I don't think they're tracking your eyes even in that system. So it seems to me that multiple brands in China have already started providing a similar, if not better, service in China. And now BYD is adding a vision on the system to cars less than $10,000. Like the car is priced less than $10,000, let alone Tesla's price being $8,000 FSD price. But on top of that, one lidar based system is about $15,000 cars, and then three lidar based system is going to be on $30 to $40 to $50,000 cars on BYD cars. So BYD is not Rivian. Okay, BYD is a top 4 global automaker with the highest growth rate, now operating in many countries. They generate more profits than Tesla does. They haven't been hyping as Tesla has been over the last decade, and they're executing really well. They produce their vehicles. They ramp their vehicle production at a much faster pace than Tesla does. So they're better in a lot of ways today. So if they have decided and announced that they're including their ADAS systems, level 2, level 3, level 4 systems on various models in the near future for free, I take their word at a higher certainty, even though it's 100%, less than 100%, at a higher probability than the words that come out of a management that argued in the court of law that if you believe their words, you are not a reasonable investor. Okay. And I'll pin that up here as we discuss this topic. Tesla will triple. Go ahead.
Thank you, Yaman. I did watch that video of Kyle that you mentioned, and that is very impressive. And I would like to dig more into that. I would like to do more research on that specific technology that was used in that car. However, when I looked at the 3 levels that BYD announced, I don't think they equally compare to what FSD can do. And if I may explain why.
Go ahead.
Thank you. So the first level on the cheap cars is equivalent to something what I would compare to like a fancy cruise control. It essentially works only on the highways, and I don't think it even provides lane changing capabilities. Then we have the mid tier, right, which will be on their cars that are kind of priced similar to what Tesla is priced. And at that level, it does not really have FSD. What they showed was that you will be able to train the car to drive a certain path, like let's say from your office to home, right? And will remember that and execute that drive for you. It will not actually do true self-driving in the streets autonomously. And then they showed the third level, which was the highest, which supposedly is capable of doing anything. However, they only showed that in like a very closed environment, in which the car was kind of racing around the track on its own without the owner, as to limit the liability, right? So I don't see really how those technologies kind of stack up against FSD today. What Tesla's trying to do, I know, obviously it's not perfect, and you did alluded to that Tesla video from a few years ago that was named in that lawsuit, right?
2016.
Yes. So I think that the technologies that BYD announced, I don't think that they all can equally stack up against FSD. And I understand FSD is not perfect, and we have all these disengagements, and everything else is happening. Unless BYD can acquire self-driving technology from other vendors, the radar doesn't in itself provide FSD, right? It's just another sensor.
Yeah, I think your understanding of BYD system is not 100% accurate. And on top of that, you're kind of assuming that BYD systems will stay stagnant for years to come. And the fact, however, is a lot of these automakers, they introduce new technology in their higher tiers, and then they work the technology down to lower tiers. But here's where the technology stands. So go ahead. First one should respond to that, Tesla.
Yeah, I mean, we can't assume that Tesla will stay constant at this level either. They're both progressing. So we cannot make that assumption against either one of them. Go ahead.
Yeah. BYD said on Monday that more than 24 vehicle models now include its proprietary advanced driver assistance system as a standard feature with no price increase, adding that its $10,000 car is capable of taking a 600-mile joyride on Chinese highways without driver intervention. The world's top electric vehicle maker announced that's where FSD is today, dude. 600-mile joyride on on highways without driver intervention is what FSD is today. And Tesla is charging $8,000 today for that software in the US, and BYD is adding it to a $10,000 car for free, meaning for the same price, you get a free car. Tesla will triple.
Well, there's a difference. It can only do it on the highway. Like I said, it's only a cruise control. It's not doesn't do streets. That $10,000 car does not drive itself on the streets, and Tesla does. It's not perfect, but it does try to drive you on the street.
Nobody other than biased influencers use FSD on city streets, on surface streets. I guarantee you. No one. So it's not just that it's not perfect. No one uses it. The world's top electric vehicle maker announced in China in a press conference that is democratizing consumer cars with the launch of 21 refreshed popular models, including the Seagull Mini EV. All models feature the so-called God's Eye ADAS system in conjunction with multiple different sensors, while remaining at the same price as their previous generations. So my take on this is that the vision on the system alone is basically as good as FSD, and they're going to improve at about the same rate. So Tesla will not be able to charge any sort of economic profits for its FSD technology in China, and probably not in Europe either, because these governments want to protect their own. And in the US, like I mentioned, I estimate the daily active users of FSD at about 100,000 out of 4 million car owners in North America, Tesla owners. So that's 2-3% daily active users conversion. And this is not just FSD, by the way. If you kind of step back and look at all AI technology, all AI use cases, look at ChatGPT. Hundreds of millions of people supposedly use it on a weekly basis now, okay, around the world. But the number of paying customers is like 10, 20 million. So this technology is available for the entire world of about 8 billion people, and only 10, 20 million people use it. So that's like 0.1% to 0.2%. People, and it's only $20 a month, and you're not putting your life in this AI's hand. So it's going to be even harder for FST to achieve that level of kind of like, conversion at $99 a month. So I think this is the overall theme that people are now open up their purses to use kind of okay AI at this point. Has to be perfect. Has to definitely do better than you and then some, because I think with AI technology, people are like an average person is kind of feeling like, and I discussed it many times here in Tesla Live and AI amateurs too. People are a little afraid to use AI. I think they're kind of like, they're afraid of the idea that robots and AI will replace them. So there's a bit more resistance to it than usual technology, I think. But maybe that's what's playing out. I don't know. I use ChatGPT. I use Gemini. I also have Grok on X. Barely use it. So I'm in the 0.1%, and I pay for all three of them. So I'm probably in the 0.01%. So don't take me or yourself as an indication of what the average person will do. You have to. That's why I say, like, tech bros in Silicon Valley need to get the fuck out of Silicon Valley and go travel the world or something, touch some grass, because the rest of the world is very different from Silicon Valley. And I bet you BYD's usage will accelerate much faster than Tesla FSD did in the last few years, just because FSD is priced. It was priced $199. Now it's $99 a month. And on top of that, before I go back to Tesla, Will, triple. On top of that, Tesla had almost the entire 2024 gave away FSD for free, and no one used it. If you look at the cumulative miles that Tesla shares in quarterly reports, it's essentially going up at a straight line, which tells me it's really the same number of bias influencers using it for the same like highway portions, and it didn't matter if it was V11 single stack or V12 or V13. It's the end-to-end models, and now it's the highway too, etc. It doesn't matter. It's just going up a straight line because no one outside of bias influencers actually want to use it. Go ahead, Tesla Triple.
So I think that, yeah, people are afraid of using AI at some level, but I think businesses will adapt it, right? Because if it can replace if it can do a specific task faster, better, then businesses will adapt it there, and overall it will lead to a reduction in the number of employees they need, right? That's where it's first going to start.
Okay, so which one do you think will generate? Let's go to XT first. And I have a question for you. XT, go ahead.
So I have a comment to what he said. AI, they try to use it, the chatbots, to for sales on websites. And if you follow the stories, they disable them because AI hallucinates and it gives you free trips to Dubai or sells you a ticket for like $10. So I don't know if you follow that. But my question was, let's say this works out for Tesla and everybody, which I highly doubt, but let's say it's a miracle happens. How many cars currently are hardware 3? Because Elon said that they're going to need to upgrade them. So how many cars do they need to upgrade? Because I think there's a lot, but I haven't checked the numbers.
I don't think that's a big deal, right? Let's say they spend about $500 of parts on labor, or parts $500 labor, and the 500, let's say per car, as 1,000. As they have a couple million, so it's like $1 to $2 billion. But the technology is going to be worth, like when it's developed, it's going to be worth a lot of money. But if your hardware 4 doesn't get there either, which I don't think is going to happen, and I don't think hardware 5 is going to get there either. So what's the point of upgrading hardware 3? I think he's just paying a lip service to appease people.
But I mean, they can't use these AI systems to do something as simple as customer support. Like they can't replace those kind of jobs. I mean, it's kind of
right.
It's so overhyped.
Yeah. Tesla will triple. Okay. Any other points? You said that the companies will adopt. Can you elaborate on that a little bit more?
This is, I think there will be just kind of like another level of what we saw of automation, right? Where if it can do a specific task really well, that's where it will start getting adopted, and eventually it will, do more and more, right? So I think where AI fails is because we have this expectation that AI will be like your own personal assistant. You can just give it a vague order, say, I want to go and travel to Europe, and you mentioned some country or city, a week ago, and it still remembers that, and it will perfectly, it knows your preferences, right? It will book you a perfect travel experience, right? Your personal, like a human assistant. Well, AIs are not capable of doing that today, and that's where our expectations are misaligned. But if you give it like a very specific task, it will be able to do that, right? And eventually that's going to start adding up, and businesses will pay for that if they can be shown the return on investment.
Yeah. So are you talking Optimus or robotaxis?
I was just talking generally about AI because you kind of said that, it's not just FSD that has the problem, it's all AIs are not living up to the promise.
Yeah. Okay. Yeah, I agree with you. I guess it's just a timeline difference, right? When do you think that's going to happen?
Yeah, that's the hard one, right? Like I kind of agree with your timelines that, probably 30s, where that's when we're gonna start seeing some AIs that are finally, getting to where our expectations are. But by then, my expectations, our post line could move again. Who knows?
Well, the problem is it's really hard to forecast 2030 plus. So how are you confident that Tesla's robotaxis will be better and cheaper than the next one? How are you confident that Optimus will be better and cheaper than the next competitor?
I am not. That's how I hang out in this space so I can learn about as much as I can, right? Like so far, Tesla hasn't been able to prove that their process, whether it's cars or anything, is cheaper than anybody else. Right? They're in certain areas that they have advantages and they're the only EV maker that was able to make profit, right? But I guess BYD is getting there now, but no other legacy maker has ever been able to do it, or even a startup like Rivian or anybody else, right? So Tesla, I don't think has any specific advantage in all the areas, right? But in certain areas, it probably has an advantage. And each, I think, what's happening, like if you look at the bot space now, like each of the, at least the leading 5 or 10, they all have like unique niches, right? And that's where they're gonna try to specialize, and they're gonna hope that this is going to be their key differentiator, right? Because none of them all can make a perfect bot today. Just like no, there's no perfect, chat GTP from any vendor.
Mm-hmm. Okay, XT.
Yeah, I think they should call AI for what it is. It's a probability model. That's why it hallucinates. Because I don't know. You said you use many different chatbots. Have you had them hallucinate and just make up stuff that you're like, what the hell was that? That was so off.
Yeah, it happens. Just this morning, as I was kind of finishing up my NVIDIA article, um, ChatGPT was just, I mean, they're so confident, and then you tell them you're wrong, and then just kind of switches out and then gives another wrong answer. And so it still happens. I mean, they were out, I think, at the end of 2022. So it's been more than 2 years now. And pace of progress, like I said, the only kind of thing that they changed that really helped a little bit is if they take their time to think. But that's kind of like, let's say if I'm playing chess, okay, and if I'm playing blitz chess and like I have a couple seconds to decide what I'm going to do next, versus I can take a few minutes or a few 10 minutes or 10 minutes to decide. Obviously, I'm going to play better if I have time to think. Like that's obvious. But that doesn't mean my IQ level is higher just because I'm playing better when I take my time.
Yeah,
So
but
that's not true. Please don't interrupt.
sorry.
Mute yourself. So that's not true intelligence, I don't think. There's also the case like if I'm playing against the world's best player, I can take forever. Like I can move every once a week. It still doesn't mean I'm gonna beat the guy, you know, because he is more intelligent about it. He's more experienced about it. So I think there's a limit to this like test time thing where like it's not like they're gonna know exactly what I'm looking for or give me 100% accurate answers if they take longer. Like it's gonna improve, but it's not gonna be perfect that way. So it seems to me that this AI problem is still a 0 to 1 problem. It's not just a pure scaling problem where you just buy tens of billions of dollars, hundreds of billions of dollars of NVIDIA GPUs, and all of a sudden you rule the world. It's not like that. And I think that's what Microsoft CEO Satya Nadella also said in a recent interview that was published, I think, on Friday. And I got to listen to it on Saturday. And he was asked, and I discussed this comment in my article at the top. He was asked, if AI is so important and it's going to generate tens of, and man, some of the things that the CEO says is kind of crazy. But like he said, for example, well, an industrial revolution, let's see the next industrial, let's grow 10%. And I looked up, like we weren't growing 10% in the industrial revolution. What are you talking about? It was like 3 to 5%. So some of these expectations are really out there. I think these 10% growth expectations. And then he was asked, well, if it's going to be trillions of dollars, tens of trillions of dollars of value, why aren't you investing $800 billion as opposed to $80 billion? And then he goes, well, the supply and demand need to map out. Well, that means demand is not there. Like that's what he's implying in that sentence, in that answer. And then he says, right in the next sentence, he goes, well, it's funny that nobody's talking about their inference revenue. And yeah, that's true, because if you look at ChatGPT, right, they have about 10 million paying subscribers, and these subscribers go on and off all the time. Like it's so easy to just cancel service, switch to another. I've done it a bunch of times too. So, Gemini comes out with a model that's better. Grok comes out with a model you can kind of switch around. You know, I mean, I kind of compare them all, but a lot of people kind of go just like FSD. They cancel when they're going to go on a big ride, like a long trip. Maybe they'll buy it for that month, kind of thing. But let's assume 10 million people pay for the entire year. Okay, so 10 million times $240 a year, you're looking at um, $2 billion of revenue, for crying out loud. And they already spent like tens of billions of dollars on this thing just on capex. And so $100 billion is spent with engineering and everything for over many years, and they generated $2 billion of annual revenue. How the fuck is that sustainable? And the prospects of a positive profit margin is lower today than it was 3 months ago because the competition is so high. you know, like Meta is improving their open source models. We heard about DeepSeek. Grok came out with a new model. Gemini is improving, and they're all doing the same fucking thing. That deep research. They just have different names for it. They're all doing test on compute. They're all letting their models think. They're all kind of doing the same image generation bullshit, and nobody has a differentiated service. And Elon's like, "Oh, Grok has real time data access. Who fucking cares?" As soon as there's a tweet, there's an article that Google can use or OpenAI can use. Who cares? We're not living in the last millisecond, you know? So maybe these things will matter 10, 20 years down the line when we all have chips in our brains and shit. But right now, no one cares and no one's paying. So these capital expenditures is why Microsoft CEO is scaling back. He's scaling back. He's canceling leases. I mean, look at these people's actions, not words. Anybody can announce, we're going to increase our spending by 50%. They won't. You'll see. GM CEO announced many years ago that they were going to beat Tesla by 2022 or something. Didn't happen, right? Elon announced they were going to have 1 million robotaxis. Didn't happen. CEOs just bullshit all the time. And that people take that to the bank and put their money in these companies. I don't get it, but that's the market we have today. XT and then Tesla will triple.
Everything you said was are the same opinions I have about AI, and I was just laughing. But these AI things, they are probability models. That's what they are. So once you understand that, everything makes sense. So human intelligence isn't like, oh, I'm probably gonna go here or probably gonna go there. There's thinking, and what is thinking? The human brain is not something known to science. They don't know much about it. So saying that probability models are gonna replace human experts, yeah.
I mean, maybe in the future, maybe for some tasks and everything. But then another thing that Satya said on this interview, Tesla will triple, I'll get back in a second, that I thought was important was he said something along the lines of they talked about like a legal bottlenecks to AI adoption. And, I think on the case of FSD, I don't think that's I mean, I didn't think it would be a big deal, but what he said was the way he put it was a little convincing. He said, no society will allow a human to say AI did that. So, for example, you booked a flight, like your AI agent that is supposed to be coming out this year, booked a flight for you, but it's to the wrong location, or it is to, it's the wrong time. You're not going to be able to get a refund on your money because it booked a wrong flight. So if it's not 100% accurate, then I don't think people will use these things. That's not point number one. Point number two, which I didn't get to discuss in my article that I wanted to, because I think it requires a little bit more math that I want to present and everything. It was already a long article. The power needed to run even today's LLMs, as basic as they are, is very high. I mean, Elon, I guess, had to locate his XAI data center near a natural gas pipeline that already existed. So if that's the kind of level of decision, I mean, Meta or Microsoft, they're looking into like nuclear energy power plants. They're building their own. If that's the level of kind of like, planning you have to do today with these basic AIs, what's it going to be when they have to think tens of minutes, or hours to run a process to kind of take stuff off your plate? So we're going to need, I think, orders of magnitude more electricity, and that doesn't come online overnight. I mean, we've seen the power packs or the mega packs that Tesla tried to install on its own facility. That took like nearly a year to get it online, which is crazy. If you go back to Joe's, drone flights, that took like a freaking almost a year to get it online, and that's on their own facility in Texas, which is supposed to have less regulation than others. So my understanding is that there are multi-year wait lines for these new power capacity come online to be added to the grid, so that it doesn't bring down the entire grid. There's a lot of permitting, there's a lot of regulation that needs to kind of go through. So I just don't see how the capabilities of AI will improve given all these bottlenecks as fast as Nvidia's or Tesla's or other companies valuations incorporate. So that doesn't make any sense. So I mean, I'm curious what Nvidia's CEO is going to say on Wednesday. I think it's going to be as bullish as usual, but I suspect their gross margins and revenue growth rate will continue to decline, and then the market will decide. Anything else, Tesla will triple?
Yeah, so I tried using Grok 3 for a thesis on Intel investment, and it was still outdated, even though it has the latest data. It was still saying that Pat Gelsinger is the new CEO. I'm like, come on, he hasn't been CEO for months now. So it's still wrong.
Yeah, exactly.
And then on the problem you were describing
I mean,
with
I
the
wanted to
chess.
yeah, exactly. I want to give it another example. Is like I was trying to use, research tense torrents, and it got the founders wrong, the CEO wrong, and then I'm like, you're wrong, and it switched it and still got it wrong. I'm like, come on, XT. Sorry, Tesla will triple.
The problem you described with playing chess, do you think that the limitations because we only have like a slice of tokens assigned to each session, and if that slice was bigger, it would be able to think through more permutations and come out with a better solution? Because we maybe need Meta to answer that question.
Yeah, when he comes, I can ask him. But can you repeat the question, please? Sorry.
So every time you do a query, right, you're using those tokens. So if each query you had access to more tokens, so if instead of for $20 you got access to one token, you have like 100. So your slice of the inference is bigger. Would it be able to provide a better answer, right, for the money you're paying them for the inference when you
Yeah,
ask the
I mean,
question?
like there's a lot of ways that you can kind of improve AI models for your own use case. You can play around with different dials about the model size and the token size and this and that, But the fact is, these are kind of improvements on the edges. Like none of these is like really, step change improvements. And these techniques have been around for many years. So Tesla team and other teams have been using these techniques. There's gonna be new techniques, right? But what the kind of improvement that's needed, in my opinion, for FSD to be robotaxiable is 10 to the 15th power. So it's not 10 times 15. It's not 150 times. It's 10 to the 15th power. There's a lot of zeros, 15 zeros next to that one. So you're not going to get there with like 5%, 10%, 20% improvements. You need step changes, kind of like what transformers allowed. And Meta had talked about Titans. I looked into Titans. I think that in certain situations, certain edge cases, maybe that will lead to some sort of improvements. We talked about those possible edge cases, but you're going to need many of those things, not just one. Because I don't think Titans is as big of an improvement as Transformers. I don't think it's going to reshape the AI industry as much as Transformers did. But you get the point. So Tesla will triple.
So it looks to me, so AI, like if you take a human baby and you show it one cat, right? It's always going to know what cat is for the rest of its life. No matter what it does, what it looks like, it will always know. But to an AI, you have to show it like millions of cats doing different things, different colors, different shapes, before it knows what a cat is. And unless we have models that can learn that fast, it's just not going to work out with the current, state of the art or current infrastructure and anything.
Yeah, exactly. I mean, let's just think of a human. How many times did you have to drive to learn how to drive? I mean, maybe a handful of times. And then how long did it take you to become a really good, an acceptably good driver where you're kind of driving on your own? You don't have to pay attention 100% of the time to everything. Maybe like a year. And then after a couple of years, you kind of get the hang of it. These things have been around for decades, and they've been and decades in the sense that like time. But if you think about the billions of miles that FSD has driven, and billions of miles that tens of billions of miles that all Teslas have driven, and they still can't even drive 97% of the rides without a critical intervention, is mind-boggling. Like that AI clearly is not at the level of learning speed as humans are today, like a human brain is. And that gap, I think, will have to close because you can't just drive quadrillions of miles to get to, 99.9999%, robotaxi level accuracy, accuracy needed for robotaxi service. It's not going to be brute force, I don't think. So when you think of it that way, okay, when you shift your mind from going brute force versus to more kind of like a more thoughtful approach, what is the problem? What kind of scientific discoveries do we need to make? Is this possible with current physics, our current knowledge of physics, or is there going to be some sort of like a quantum computing or something along those lines? When you think of it that way, when you think of it as more of a 0 to 1 problem, I don't think Tesla will beat Google on a 0 to 1 problem to autonomous driving. I think Tesla could have beaten Google from 1 to 100 because they had the manufacturing expertise and everything, what they did. But even that's kind of gone now. Like BYD is a better manufacturer than Tesla. A lot of Chinese companies are better manufacturers than Tesla. So I just don't see how Tesla's advantage. I don't see what advantage Tesla has on autonomous driving or Optimus, for that matter. XT.
Yeah, I have an excellent book to recommend you from AI experts. And many of the things you cover, it's explained in the book, and it's and what you talked about, how much power it needs, and all these kind of things. The only thing I disagree with is I don't think this bubble is ready to pop yet, because I think they're gonna continue pouring money down this rabbit hole and try to get this AI to reason, but you can't get it to reason. It's just a probability model, so the whole thing is like ridiculous. And these CEOs that pop up this stuff, this stock, if it doesn't work out, you'll have to get a generational leap in AI to make
Okay.
it reason and function. So I think it's gonna take maybe
Okay.
decade. Yeah.
I mean, you just repeated what I said. Is there anything new you want to say or ask?
So why do you think BYD is offering these kind of systems for free, basically?
I don't know. I mean, that's a good question. I think that if the service is good, you can't charge money. So maybe they realize that, all the reasons that we discussed earlier, people have a tendency to not pay for these things, software add-ons on cars. People have a tendency to not take on AI, let alone pay for it. I mean, it's taken more than 2 years for ChatGPT to kind of grow across the world, and they still can't charge anything. Like after DeepSeek, they had to make one of their better models free. So that kind of shows. Sorry, you can't. I'm gonna move you down. Sorry, I keep interrupting. Um, so that kind of shows the level of intense competition in this space. So a couple of questions from YouTube live chat. Guy asks, FSC is trying to come in. I've heard tweets about it. Maybe, maybe not. Who knows? My point is that even if it comes to China, it's dead on arrival. And that's it. Can you expand on your views on Grok? I honestly haven't tried Grok 3 too much. I tried to feed it one thing and it's just said there's too much demand right now. We're going to give you another model. I'm like, okay. I don't know how much demand there can be because how many premium plus users are there? So anyway, but Grok 2 was horrible. It was unusable for me. And Grok 3, so far, I haven't seen anything that Grok can do that others can't do. So if that's the case with that much co-located GPUs, what does that say about scaling laws? And I don't know. And then the other question before Tesla will triple, go ahead.
But all of the Tesla fanboys and bulls are saying that Grok 3 is the greatest AI ever.
Yeah, right. Smartest AI. Okay. And then smartest AI turns out wants to kill Trump and thinks Trump and Elon are the biggest disinformation people. So I don't know. Maybe they are the smartest. Who knows? Let's see. Another question. And do you think Grok Voice will be integrated with Tesla cars and Optimus? Yes, of course. I'm sure they will be. If so, when do you think it will happen? A year or two. But I don't think it will matter. And then Kevin asks, how many people use Amazon when it first rolled out? Many people are afraid of buying things online. Times change. Yeah, it took 20 years for times to change. I think only in this quarter, Amazon revenues exceeded Walmart revenues. So that's 2025. It took 25 years, 30 years after Amazon's founding. So I think Optimus and humanoids and autonomous driving will be a very important part of the future, but 2030 plus. And it's hard to say if Tesla's FSD is the Amazon or Waymo is the Amazon or BYD is the Amazon. That's hard to, at least as far as I'm concerned, that's hard to say. And I think the biggest catalyst here is the fact that Elon is not as focused on Tesla anymore. He's not sleeping on the factory floor. Who knows how many, back in 10 years ago when he was doing Model S, that was the only thing he was focused on. SpaceX was kind of in the background. He didn't have 13 kids. He wasn't on Doge or whatever. He wasn't getting bombarded. He actually had the support of the people. Now the people are against him. And I think he's losing credibility at a very fast rate. We all saw just what happened with AFD in Europe. They were polling about 19%. They placed about 20%. So before Elon got involved, they were about 19, and they placed about 20% of the votes. So that's like that's not even, and they didn't get into government. And the momentum AFD had from previous election was ongoing before Elon got involved. So it was 10% last election. They were polling 19% before Elon got involved. They end up at 20%. So it's kind of like, even if he didn't get involved, they would have probably achieved 20%. So he lost, I think in my mind, he lost any sort of political cachet that he had. And now we're seeing a lot of friction between Doge and some of the appointees of Trump administration. These FBI director, for example, telling his staff not to respond to this email and all that stuff. So to the extent that your investment thesis depended on Elon being close to Trump, I think that's also at an increasing risk as well. On top of that, both Trump and Elon approval ratings are plunging at a very rapid pace in the last month or so. So there's a lot of uncertainty there. All right. What else? I want to. Anything else Tesla will triple on Tesla or Nvidia or macroeconomics? Otherwise, I want to read this Berkshire Hathaway letter.
No, you're just going through so many different topics, so just go ahead. It's a great show so far.
Yeah, thank you. Yeah, we're covering a lot for sure. All right, let's read this. Berkshire Hathaway. Man, there's also another thing I want to kind of point out here, and I'll pin this at the top. This is an interview from 9 years ago, 4 or 5 minutes of video. You can listen to Warren Buffett, Charlie Munger, and Bill Gates discussing the future of autonomous driving. This is when Tesla started saying that their cars are going to drive from parking lot to parking lot, from LA to New York, with no controls, touched and everything. And it's going to change everything. And it's going to change transportation. And Warren Buffett says it's a long way out, more than a decade out. And he was right. I mean, this guy is not involved in vehicle manufacturing. He's not didn't know anything about AI at the time, as far as I'm concerned, as far as I know. He didn't have any investments into tech companies. Even Apple, I don't think was an investment at that point, or maybe he was just starting. And he was able to predict the future of autonomous driving, at least on the surface, better than Elon. Now, to the extent that Elon wasn't being honest with his predictions, maybe Elon knew as well. Who knows? But public comments were that Tesla was going to drive parking lot to parking lot, LA to New York, no controls, by the end of 2017. And Warren Buffett was right. Elon Musk was wrong. And Elon was raising money on those promises. So Tesla will triple. And with that liaison, we're going to switch to Berkshire.
Yeah, that's the old man wisdom.
Yeah, I don't know what it is. Maybe I don't want to know. Berkshire Hathaway. To the shareholders of Berkshire Hathaway, this letter comes to you as part of a Berkshire's annual report. As a public company, we are required to periodically tell you many specific facts and figures. I'm gonna skip the insurance kind of stuff. We're gonna look at market commentary. Okay. Quote: report, however, implies a greater responsibility. In addition to the mandated data, we believe we owe you additional commentary about what you own and how we think. Our goal is to communicate with you in a manner that would wish you to use if our positions were reversed. That is, if you were the Berkshire CEO while I and my family were passive investors, trusting you with our savings. This approach leads us to an annual recitation of both good and bad developments at the many businesses you indirectly own through your Berkshire shares. When discussing problems at specific subsidiaries, we do, however, try to follow the advice of Tom Murphy gave to me 60 years ago. Praise by name, criticize by category. Man, it's like just reading this is so refreshing after 7 years of Tesla hype and booms and busts, and personal attacks on government employees and cave divers and short sellers and a bunch of others. This is just so refreshing. Mistakes. Yes, we make them at Berkshire. Sometimes I made mistakes in assessing the future economics of a business I purchased for Berkshire. Each a case of capital allocation gone wrong. That happens with both judgments about marketable equities. We view these as partial ownership of businesses and the 100% acquisitions of companies. At other times, I made mistakes when assessing the abilities or fidelity of the managers Berkshire's hiring. The fidelity disappointments can hurt beyond the financial impact, a pain that can approach that of a failed marriage. A decent batting average in personnel decisions is all that can be hoped for. The cardinal sin is delaying the correction of mistakes, or what Charlie Munger called thumbsucking. Problems, he would tell me, cannot be wished away. They require action, however uncomfortable they may be. During the 2019-2023 period, I have used the words mistake or error 16 times in my letters to you. Many other huge companies have never used either word over that span. Amazon, I should acknowledge, made some brutally candid observations in its 2021 letter. Elsewhere, it has generally been happy talk and pictures. I have also been a director of large public companies at which mistake or wrong were forbidden words at board meetings or analyst calls. That taboo, implying managerial perfection, always made me nervous, though at times there could be legal issues that make limited discussion advisable. We live in a very litigious society. At 94, It won't be long before Greg Abel replaces me as CEO and we'll be writing the annual letters. Greg shares the Berkshire creed that a report is what a Berkshire CEO annually owes to owners. And he also understands that if you start fooling your shareholders, you will soon believe your own baloney and be fooling yourself as well. Pete Legal, one of a kind. Let me pause and tell you the remarkable story of Pete Legal, a man unknown to most Berkshire shareholders, but one who contributed many billions to their aggregate wealth. Pete died in November, still working at 80. I first heard of Forest River, the Indiana company Pete founded and managed, on June 21, 2005. On that day, I received a letter from an intermediary detailing relevant data about the company, a recreational vehicle manufacturer. The writer said that Pete, the 100% owner of Forest River, specifically wanted to sell to Berkshire. He also told me the price that Pete expected to receive. I liked this no-nonsense approach. I did some checking with RV dealers, liked what I learned, and arranged a June 28th meeting in Omaha, so 7 days later. Pete brought along his wife, Sharon, and daughter, Lisa. When we met, Pete assured me that he wanted to keep running the business but would feel more comfortable if he could assure financial security for his family. Pete next mentioned that he owned some real estate that was leased to Forest River and had not been covered in the June 21 letter. Within a few minutes, we arrived at a price for those assets, as I expressed no need for appraisal by Berkshire, but would simply accept his valuation. Man, this is amazing. Then we arrived at the other points that needed clarity. I asked Pete what his compensation should be, adding that whatever he said, I would accept. This, I should add, is not an approach I recommend for general use. Pete paused as his wife, daughter, and I leaned forward. Then he surprised us. Well, I looked at Berkshire's proxy statement and I wouldn't want to make more than my boss, so pay me $100,000 per year. After I picked myself off the floor, Pete added, but we will earn X, he named the number, this year, and I would like an annual bonus of 10% of any earnings above what the company is now delivering. I replied, okay, Pete, but if Forest River makes any significant acquisitions, we will make an appropriate adjustment for the additional capital thus employed. They didn't define appropriate or significant, but those vague terms never caused a problem. The four of us then went to dinner at Omaha's Happy Hollow Club, and I lived happily ever after. During the next 19 years, Pete shot the lights out. No competitor came close to his performance. Every company doesn't have an easy to understand business, or there are very few owners or managers like Pete. And of course, I expect to make my share of mistakes about the business Berkshire buys and sometimes err in evaluating the sort of person with whom I'm dealing. But I've also had many pleasant surprises in both the potential of the business as well as the ability and fidelity of the manager. And our experience is that a single winning decision can make a breathtaking difference over time. Take Geico as a business decision, Ajit as a managerial decision, and my luck finding Charlie Munger as a one-of-a-kind partner, personal advisor, and steadfast friend. Mistakes fade away, winners can forever blossom. One further point in our CEO selections. I never look at where a candidate has gone to school. Never. Of course, there are great managers who attend the most famous schools, but there are plenty, such as Pete, who may have benefited by attending a less prestigious institution or even by not bothering to finish school. Look at my friend Bill Gates, who decided that it was far more important to get underway in an exploding industry that would change the world than it was to stick around for a parchment that he could hang on the wall. Read his new book, Source Code. Not long ago, I met by phone Jessica Tunkel, whose step grandfather, Bez Rosner, long ago ran a business for Charlie and me. Ben was a retailing genius, and in preparing for this report, I checked with Jessica to confirm Ben's schooling, which I remembered as limited. Jessica's reply: Ben never went past sixth grade. I was lucky enough to get an education at three fine universities, and I avidly believe in lifelong learning. I've observed, however, that a very large portion of business talent is innate, with nature swamping nurture. Pete Legal was a natural. Okay. And it goes on to last year's performance. That's page 4. And there's page 5, 6, 7, 8, 9, property casualty insurance. We're going to take our time reading. It's a very long letter. And I don't really have all this time right now. But yeah, this is amazing. I look forward to the annual meeting and always enjoy, schedule out my. Really, I don't really use a schedule too much. And I don't really schedule things out, but I block off that day and I just listen live. I watch the thing live, so that's going to happen shortly here in a few weeks, and yeah, good times. Yeah, he's talking about his cash balances and everything. All right, why don't we just read a couple more pages? Let's do a couple more pages. Let me see if I can find a breaking point here. Yeah, let's read a couple more pages and then we'll call it a day. Last year's performance. In 2024, Berkshire did better than I expected, though 53% of our 189 operating businesses reported a decline in earnings. We were aided by a predictable large gain in investment income as Treasury bill yields improved and we substantially increased our holdings of these highly liquid short-term securities. Our insurance business also delivered a major increase in earnings, led by the performance of Geico. In 5 years, Todd Combs has reshaped Geico in a major way, increasing efficiency and bringing underwriting practices up to date. Geico was a long-held gem that needed major repolishing, and Todd has worked tirelessly in getting the job done. Though not yet complete, the 2024 improvement was spectacular. In general, P&C insurance pricing strength during 2024 reflect a major increase in damage from convective storms. Climate change may have been announcing its arrival. However, no monster event occurred during 2024. Someday, any day, a truly staggering insurance loss will occur, and there's no guarantee that there will be only one per annum. The P&C business is so central to Berkshire that it warrants a further discussion that appears later in this letter. Berkshire's railroad and utility operations, our two largest businesses outside of insurance, improved their aggregate earnings. Both, however, have much left to accomplish. Late in the year, we increased our ownership of the utility operation from about 92% to 100% at a cost of roughly $3.9 billion, of which $2.9 billion was paid in cash with a balance in Berkshire B shares. All told, we recorded operating earnings of $47 billion in 2024. We regularly, endlessly, some readers may groan, emphasize that this measure rather than the GAAP mandated earnings that are reported on page K68. Our measure excludes capital gains or losses on the stocks and bonds we own, whether realized or unrealized. Over time, we think it highly likely that gains will prevail. Why else will we buy these securities? Though the year-by-year measures will swing wildly and unpredictably. Our horizon for such commitments is almost always far longer than a single year. In many, our thinking involves decades. These long-termers are the purchases that sometimes make the cash register ring like church bells. Here's a breakdown of 2023-24 earnings. All calculations are after depreciation, amortization, income tax. EBITDA, a flawed favorite of Wall Street, is not for us. By the way, EBITDA is what Charlie Munger called bullshit earnings, and adjusted EBITDA, I think he was asked about it, and he called bullshit earnings. And adjusted EBITDA is what Elon was paid tens of billions of dollars from Tesla investors based on adjusted EBITDA, which turns out is not that good of a measure, as Charlie Munger predicted. All right, let's continue. Surprise, surprise, an important American record is smashed. 60 years ago, present management took control of Berkshire. That move was a mistake, my mistake. and one that plagued us for 2 decades. Charlie, I should emphasize, spotted my obvious error immediately. Though the price I paid for Berkshire looked cheap, its business, a large northern textile operation, was headed for extinction. The US Treasury, of all places, had already received silent warnings of Berkshire's destiny. In 1965, the company did not pay a dime of income tax, an embarrassment that had generally prevailed at the company for a decade. That sort of economic behavior may be understandable for glamorous startups, but it's a blinking yellow light when it happens at a venerable pillar of American industry. Berkshire was headed for the ash can. Fast forward 60 years and imagine the surprise at the Treasury when that same company, still operating under the name Berkshire Hathaway, paid far more in corporate income tax than the US government had ever received from any company. Even the American tech titans that commanded market values in the trillions. To be precise, Berkshire last year made four payments to the IRS that totaled $26.8 billion. That's about 5% of all corporate America paid. In addition, we paid sizable amounts of income taxes to foreign governments and to 44 states. Note one crucial factor allowing this record-shattering payment. Berkshire shareholders during the same 1965 to 2024 period received only one cash dividend. On January 3, 1967, we dispersed our sole payment, 10 cents per A share. I can't remember why I suggested this action to Berkshire's board of directors. Now it seems like a bad dream. For 60 years, Berkshire shareholders endorsed continuous reinvestment, and that enabled our company to build its taxable income. Cash income tax payments to the US Treasury, minuscule in the first decade, now aggregate more than $101 billion and counting. Huge numbers can be hard to visualize. Let me recast the $26.8 billion that we paid last year. If Berkshire had sent the Treasury $1 million check every 20 minutes throughout all of 2024, visualized 366 days and nights because 2024 was a leap year, we still would have owed the federal government a significant sum at year end. Indeed, it would be well into January before the Treasury would tell us that we could take a short breather, get some sleep, and prepare for our 2025 tax payments. Berkshire's equity activity is ambidextrous. In one hand, we own control of many businesses, holding at least 80% of the investees' shares. Generally, we own 100%. These 189 subsidiaries have similarities to marketable common stocks, but are far from identical. The collection is worth many hundreds of billions and includes a few rare gems. Many good but far from fabulous businesses, and some laggards that have been disappointments. We own nothing that is a major drag, but we have a number that I should not have purchased. In the other hand, we own a small percentage of a dozen or so very large and highly profitable businesses with households names such as Apple, American Express, Coca-Cola, and Moody's. Many of these companies earn very high returns on the net tangible equity compared to their operations. At year end, our partial ownership holdings were valued at $272 billion. Understandably, really outstanding businesses are very seldom offered in their entirety, but small fractions of these gems can be purchased Monday through Friday on Wall Street, and very occasionally they sell at bargain prices. We are impartial in our choice of equity vehicles, investing in either variety based on where we can best deploy your and my family's savings. Often, nothing looks compelling. Very frequently, we find ourselves knee-deep in opportunities. Greg has vividly shown his ability to act at such times as did Charlie. With marketable securities, it is easier to change course when I make a mistake. Berkshire's present size, it should be underscored, diminishes this valuable option. We can't come and go on a dime. Sometimes a year or more is required to establish or divest an investment. Additionally, with ownership of minority positions, we can't change management if that action is needed or control what is done with capital flows if we are unhappy with the decisions being made. With controlled companies, we can dictate these decisions, but we have far less flexibility in the disposition of mistakes. In reality, Berkshire almost never sells controlled businesses unless we face what we believe to be unending problems. An offset is that some business owners seek out Berkshire because of our steadfast behavior. Occasionally, that can be a decided plus for us. Despite what some commentators currently view as an extraordinary cash position at Berkshire, the great majority of your money remains in equities. That preference won't change. While our ownership in marketable equities moved downward last year from $354 billion to $272 billion, the value of our non quoted controlled equities increased somewhat and remains far greater than the value of the marketable portfolio. Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their monies in equities, mostly American equities, although many of these will have international operations of significance. Berkshire will never prefer ownership of cash equivalent assets over the ownership of good businesses, whether controlled or only partially owned. Paper money can see its value evaporate if fiscal folly prevails. In some countries, this reckless practice has become habitual, and in our country's short history, the US has come close to the edge. Fixed coupon bonds provide no protection against runaway currency. Businesses, as well as individuals with desired talents, however, will usually find a way to cope with monetary instability as long as their goods or services are desired by the country's citizenry. So too with personal skills. Lacking such assets as athletic excellence, a wonderful voice, medical or legal skills, or for that matter, any special talents, I have had to rely on equities throughout my life. In effect, I have depended on the success of American businesses, and I will continue to do so. Last page. One way or another, the sensible but better yet imaginative deployment of savings by citizens is required to propel an ever growing social output of desired goods and services. This system is called capitalism. It has its faults and abuses, in certain respects more egregious now than ever, but it also can work wonders unmatched by other economic systems. America is Exhibit A. Our country's progress over its mere 235 years of existence could not have been imagined by even the most optimistic colonists in 1789, when the Constitution was adopted and the country's energies were unleashed. True, our country is its infancy sometimes borrowed abroad to supplement our own savings. But concurrently, we needed many Americans to consistently save and needed those savers or other Americans to wisely deploy the capital thus made available. If America had consumed all that it produced, the country would have been spinning its wheels. The American process has not always been pretty. Our country has forever had many scoundrels and promoters who seek to take advantage of those who mistakenly trust them with their savings. But even with such malfeasance, which remains in full force today, and also much deployment of capital that eventually floundered because of brutal competition or disruptive innovation, the savings of Americans has delivered a quantity and quality of output beyond the dreams of any colonist. From a base of only 4 million people, and despite a brutal internal war early on, pitting one American against another, America changed the world in the blink of a celestial eye. In a very minor way, Berkshire shareholders have participated in the American miracle by foregoing dividends, thereby electing to reinvest rather than consume. Originally, this reinvestment was tiny, almost meaningless, but over time it mushroomed, reflecting the mixture of a sustained culture of savings, combined with the magic of long term compounding. Berkshire's activities now impact all corners of our country, and we are not finished. Companies die for many reasons, but unlike the fate of humans, old age itself is not lethal. Berkshire today is far more youthful than it was in 1965. However, as Charlie and I have always acknowledged, Berkshire would not have achieved its results in any locale except America, whereas America would have been every bit the success it has been if Berkshire had never existed. So thank you, Uncle Sam. Someday, your nieces and nephews at Berkshire hope to send you even larger payments than we did in 2024. Spend it wisely. Take care of the many who, for no fault of their own, get the short straws in life. They deserve better. And never forget that we need you to maintain a stable currency, and that result requires both wisdom and vigilance on your part. All right. On that note, we're going to close out today. Thank you very much, everybody, and I will chat with you all tomorrow. Take care.